Okay, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Properties. Today, we are with Jeffrey Donis. Jeffrey and his brother have built a six-figure business from rentals, now owning over 1,000 multifamily units. They aim to empower others through apartment investing. Jeffrey also hosts a Real Estate Monopoly podcast and manages investor relations at Donis Investment Group. Jeffrey, we're excited to have you on board with us today. If you could just let the listeners know a little bit more about yourself.
Yeah, no, I appreciate the opportunity, Josh. Nice to finally meet face to face.
Yeah.
My brothers and I, just to give you a quick background on us. We were born in New York, so I'm a twin. I have an older brother. I'm 21 years old, and my older brother is 24. We got started in real estate at the age of personally 18. I was a college student at the time. It started with wholesaling at first in our dorm rooms. We were just cold calling. Eventually, COVID-19 happened, and we were all sent home because of that. So at that point, we were part-time business owners, full-time students, and it slowly started to shift towards being a full-time business owner and a part-time student, and then eventually pursued real estate full-time. So after the first year where we're all doing single family, we had done about a little over 10 transactions. I think it was like 13 or 15 in a single family space that consisted of fix and flips, wholesale deals, and some creative financing. We learned about the syndication space, eventually decided to join a mastermind group called Think Multifamily, and that really opened the floodgates for the network, wisdom, and the deal flow. So eventually we were able to get into our first few multifamily deals as GPs, and now we obviously focus on our own aspects within our company. But my older brother does our acquisitions, I do our investor relations and capital raising, and then my twin brother does our marketing. So we have a podcast, a lot of social media content and things like that. And yeah, that's a quick background as to what we've done and how we got here.
Nice, cool. Starting from from ground up, that's awesome. What made you all want to get into real estate to begin with? What was the motivation?
Yeah, so we grew up with a single mother. She's from Guatemala, so it's a country in Central America, third world country, and we had actually gone there for the first time. My twin and I had been there for the first time back in December of 2021. Actually, 2020. I think it was 20. I forget the year. It was pretty much like the few months before we got into real estate, and we realized that my mom, when she would tell us these stories, she was not exaggerating at all in regards to how she grew up. I was there for 3 weeks and take a shower. It was either you take a cold shower that comes out of we call it a chorro. It's like a drain, and you have to fill up a pan and you'd heat it up under a fire, and then you'd have hot water to shower with, or just a cold shower. So I preferred a little bit of a warmer shower, so I had to heat the water up. Another thing I saw with my family members was they were wearing t-shirts that I hadn't seen in years. Now, growing up, I don't know how familiar you are with like Hispanic culture, but a lot of the families that I grew up around, they fill up these huge boxes, and they were like 3 times bigger than I was at the age, right? So I could, like, my brothers and I would play in them. Well, my mom was packing them with different things, and she would send it to Guatemala. And I was like, Mom, who are you sending this to? And she said, your family back home. And I was like, but I don't even like use these things. Why would they use them? Fast forward, when I was now 18 in Guatemala for the first time, I was seeing t-shirts that I was not even using, and they were using them every single week. So they would pretty much using all of those supplies, and I saw how good I had it here in the States. And I grew up thinking I was low income because that's what I was told from people at school or different financial aid services that I was in, that I qualified for because I was low income. But I saw what real low income was in other countries, and we quickly realized that we had an awesome opportunity here to make some money. And we also saw how hard my mom worked. So we wanted to retire her, and that's still our goal, is to allow her to leave her job. So all in all, that's what drove us to pursue some type of entrepreneurial journey and endeavor to see if we could retire her. And that's really what sparked the journey.
That's huge. That just kind of that proves the concept that it's what you think. It's in your head. It's breaking the barriers of your personal beliefs and getting through those. So you've got over 1,000 units right now. Is that correct?
We're GPs on over 1,000. Yeah.
Okay, so tell us that journey. How did you? Because it's 2023, and you said in 2020. Is that correct?
Real estate in 2020. Yeah.
Mm-hmm. Okay, and then how long have you been in multifamily to acquire over 1,000 units?
It's been almost 3 years.
Almost 3 years.
Mhm.
That's incredible. That's huge. Tell us how, because that's rapid growth, and you're on a general partnership. So you're raising capital, you're putting together syndications, PPMs.
Mhm.
Tell us about. Let's dive deep into that. How did you get started
Yeah.
and start to go from there?
Yeah. So initially we heard about syndication through different gurus and different podcasts we were listening to. And we knew that our ultimate goal was to get into multifamily. We saw it as obviously for us was obvious that it would be the best way for us to grow our wealth and to scale our portfolio, which was why we got into real estate, was to own assets. And at the time we were wholesaling. And if you don't know what that is, you're pretty much marketing to find homeowners and then marketing to end buyers to connect the two and make a fee. So all of that was awesome because it produced income, but it wasn't allowing us to build our wealth because we weren't actually owning the asset. And we got into real estate to own assets, not to help other people buy them and do whatever they wanted to do with them, right? So we heard about syndication because we were listening to those podcasts and it was so appealing because we couldn't afford to buy a multi-million-dollar property at the time, but if you can somehow provide value and connect certain pieces and put a team together that can go and take down these types of deals, you can become an owner in a large asset without actually having to bring all the money yourself. So that's what attracted a young guy like me and my brothers. So first step was to educate ourselves. We read the best ever apartment syndication book by Joe Fairless. We treated that as if it was a textbook,
Yeah.
and we were all just fresh out of college, so we kind of knew how to study and things like that. Eventually decided to make an action plan, and the first step was to find a mentor because we tried going the solo route and it didn't go very well. We were cold calling a lot of brokers, and they were just telling us, asking us these questions like, "What's your track record? How many deals have you done? How many doors do you own?" All of these things that we weren't going to lie to them and make something up. We had to tell them the truth, and it was pretty much none on all fronts. So eventually decided to take some of the profits that we'd made in our single family business and invest in a mastermind group called Think Multifamily.
Yeah.
Now, there's a lot of groups like this out there. We like this one because we actually get to partner with the person in the group. His name is Mark Kenny. So we get to partner with him. And that's really what allowed us to have more traction when it came to the raising capital aspect or deal flow, whether that was through other GPs in the group or brokers. So my brother Kenneth, now instead of going to a broker and saying, "I've never done a deal," he can say, "Our team has done this." And obviously it's really true because we are partnering with this partner, Mark, and he's actually signing on the LOI and things like that. So it provides a lot of credibility, and you can leverage that track record that he's taken him a long time to create. So when we got into the group, as I mentioned, it came with the network, knowledge, and deal flow. And we started just seeing how we could provide value. On the first few deals, we were actually co-GPs where we typically do some type of asset management. It's not as heavy as it is on the deals that we're lead sponsors on. But when it comes to the first few, we were helping on the front end in regards to marketing. So small things like putting emails together, sending out those emails, and then helping with pitch decks, things like that. Once you closed, we were raising capital throughout that process. And then now we visit the properties a few times a year. Sometimes the lead sponsors can't make it out there, and we live on the East Coast, which is why we actually chose to invest in the Southeast because we live nearby. So we drive to these properties pretty often. And whenever there's something that needs to get done, whether that's walking it with a vendor or just checking in on it, maybe doing what we call secret shopping, we'll do that for them. And obviously that helps us learn a lot as we've done that. And it's given us the confidence to go after deals by ourselves. Now that you've been on a GP team, you kind of can say, I'm on this team. I've bought this deal. I've been through the process a few times now. So you can approach brokers and investors with more confidence. But I won't dive into each deal because it's been 5 now. So we don't have to go into too much detail if you don't want to, but we can if you'd like.
Yeah, give it away. Let's let the listeners hear about it. That's the whole point, is to hear your journey, and then because everyone's trying to connect the dots. It's how do I get my first deal? How do I get into multifamily? And you're doing it. And you just said mentorship, and that's a huge accelerator to get there. And using experience of others to help solidify your ability to close. That's crucial. But let's go through some deals. Tell us about them.
Yeah. So I'll go into the one that I think I can give the most value on. So we recently purchased a property in Atlanta, Georgia. It was a little under 200 units. And this one, my partner, who's my brother, he found it. He runs our acquisitions department. So pretty much, and this is actually how we're hoping to win another deal, similar manner, where he reaches out to brokers. And originally, when you do that, it helps to have, as I mentioned, a partner that you can leverage. We obviously, at the time when we were first getting started, didn't have that much experience in multifamily, but as you start to build your own track record, or before you do that, as long as you have that key partner on your team, and this person can serve as a key principal, meaning they'll sign on the loan, which the broker will ask, who's going to be signing on your debt? Can you do it? Things like that. Where are you going to get your debt from? Who's going to provide your insurance? All of these things. If you find one key partner and you can partner with them, now you can bring value through paying for his mentorship, or just saying, I'll find the deal and you just do all the rest and things like that.
Mm-hmm.
And they might be willing to work with you. So we had already joined this mastermind group. Mark Kenny was on our deal, and we already had agreed that we'd partner if we found something. Kenneth had reached out to a broker who we had been talking to on another deal, and we ended up losing out on that first one. But eventually he found something else that had fallen out of contract the week before. Seller didn't want to go back on market because it doesn't look good when one property falls out of contract. The next seller is going to think that there's something wrong with it, or that they can get a discount or something like that. So what they'll do typically, in cases that I've seen, they'll go and reach out to some, they call it pocket listings, where they'll reach out to some close network that they have of buyers. And we were fortunate to have been close at that point. And we just talked to that broker the week before. So we were top of mind. And I think that's where massive action pays off. So he called my brother and said, hey, we have this deal. It's about to fall out of contract. You guys can submit an offer. Let me know. I'll send the financials to you. You can let me know where you are on it, and we can walk it. And then my brother went out there the next week, walked it, underwrote it. It worked out. We submitted the offer. The next day it got accepted. So that's how it shows you how fast the seller was willing to move. And then once that point hit, this one was a little under $10 million that we had to raise. So there's so many different pieces that start to move when you're taking down a deal this large, and going through it as a lead sponsor for the first time was definitely a learning experience and uncomfortable, but obviously that's where you grow. And I think a lot of people in the audience probably know that by now, if you're on this call or watching this on a podcast or listening to it. But for us, that's exactly what it felt like. We never raised that much money on any deal. And we were like, okay, well, we have this partner on our deal who's already done a lot bigger raises than this. So if he's willing to partner with us, we're just going to go with it. Even if we're scared, we'll figure it out. So I had already been networking for months on end before that. And I went to mastermind group, different masterminds, my own mastermind that I was in with that partner, and then a lot of networking events across the country, meeting people. I was on LinkedIn networking, getting on a lot of phone calls, things like that, trying to see, as a capital raiser, who can help fund a deal if I were to find it. Now, once I found the deal, it was a lot of phone calls after that, connecting back with these people, asking them if they were interested, giving them information. I'd already had relationships with all these people, but that was something that I think it helps to have done before. So fortunately, we already had that existing network. We were able to eventually get the capital raise done. It did take a little bit longer than we had thought. That happened in May, that we got it under LOI, and we closed towards the end of the year. So it was definitely a stretched out raise. But when it comes to the environment that we were in, there were so many people struggling and people were losing their earnest money. So we had like $1 million on the line at that point, and we were fortunate. And I think obviously, things.
What year is this?
This was last year.
Last year. Okay. Got it.
Yeah. May, when the Fed started raising interest rates.
Yeah.
When we got it under LOI. So definitely like a learning lesson. And I think you grow as an investor and as a person, and personally someone doing it at a young age. You just kind of are forced to mature if I hadn't already. You kind of have to, right? You have to put on your big boy pants and get things done. No one's going to get it done for you. So what really helped throughout that process was our partner, because he has access to the attorney that we didn't have to go find. He had access to the insurance broker. So we already had people to go to for insurance, for our SEC paperwork, PPM documents, subscription documents. And then on top of that, he also had a mortgage broker who helped with debt. And right at that time, interest rates going through the roof, and we had no idea where the interest rates were going to go at the time.
What kind of debt did y'all get?
On that one, we ended up getting a bridge loan, and it was obviously, that's why it was not the easiest to raise on, but we obviously got a rate cap at the time, very expensive for it. But obviously now we look back and we were always going to do it, but I'm even more happy that we done. But yeah, in regards to the rest of the relationships that we were able to bring into the deal, it worked out because of the partner. So if you have no track record, you really can't expect to be able to attract top-notch people into your deal. But if you do, then typically it just goes a lot more smooth because you are able to attract those partners because they want to partner with people that have experience.
Yeah. What kind of terms did you get on the bridge debt? And then are you all planning on refinancing? I'm assuming you've got CapEx and that's why you wanted to do a bridge.
Correct. So it is a value add. I wouldn't say it's a heavy value add, but it's a Class C deal. And there was some deferred maintenance and things like that we are working on right now, actually. In regards to the terms, it was, I want to say 400 basis points over SOFR. So we were locked in at 6.5 because we got 2.5 rate cap over 2 years. So it's not that, I think it's not bad at all in regards to our entry point. We saw that in underwriting and we cash flowed and at that point. So we were confident that was the right decision to go with.
Yeah, no, that works. And then refinance into some agency debt and 40-year amortization and let the thing cash flow. That works. Yeah. That's good. Cool. So you've got, and that's a little under 200 units?
Correct.
And then you all are using third-party property management. Is that correct?
Mm-hmm. Yeah.
Okay, cool. Very cool. Awesome. And then, so that's one of the deals. And then the other ones, how are you all managing the activities on all the, is it just the GP as a whole that's asset managing and making sure that business plans are being executed?
Correct. So there are some lead asset managers. Obviously we can't have every single person doing that and it's not my strength. And I don't live there. A lot of our asset managers on the other deals live nearby the property. So they're able to go and be boots on the ground, which is what I prefer. If I'm going to be on a deal, I want the asset manager to live nearby. In regards to those, we're pretty much getting on asset management calls weekly to manage it. Now we all participate in that, but I would say our roles are a little bit more minor in regards to the lead asset manager.
Yeah, got it. How do you recommend raising capital for the listeners out there? How would you go about starting to build those relationships?
Yeah, I think it's a mixture of things. For me, and I like to take the approach of if I can do it in the way that we did it, I think it's possible for anyone because being young and when you start out, obviously, whether you're young or not experienced, it's kind of the same thing, right? If you're young, you almost automatically don't have experience. So what we first did was we built an online presence and a brand. And we didn't do that with the intention of wanting to raise capital, although now looking back, that's what's helped us. Whether you're attracting institutional investors, retail investors, co-GPs, whoever it is, a lot of times it's made my job a lot easier if they already knew who I was. And a lot of times they've heard of my brothers and I because we were on a podcast, or they follow me on Instagram, or they met me at a networking event. Now, all of that comes because we took a lot of action and it's a lot of work. And sometimes it feels like, there's no return on this. I don't see like how I can make $1 profit on this. But eventually you start to realize that, wow, people are starting to know who you are. And when you call them for the first time out of the blue, they've heard of you. So it kind of already establishes some form of credibility if you're a thought leader in the space. So whether you're doing a podcast or making content on Instagram, Facebook, LinkedIn, all of this helps, especially when it comes to raising money. On top of that, if you can surround yourself with awesome partners, if you're new, people are going to invest with you if they trust the team. And I know everyone's probably heard this, where a bad team can turn a really good deal into a bad deal, and a really good team can turn a bad deal into a good deal.
Yeah.
At the end of the day, numbers are just numbers, right? You obviously want to invest into a deal if you believe in the numbers, but in my opinion, I think the most important thing is the team that you're investing in. So if there's a solid team around you, that'll help your capital raising abilities.
Yeah, for sure. Well, and that's performance builds trust. Trust is based on performance. So if you've got a solid team around you, then the trust is already there. The team can execute. That's huge. Very cool. Very good story. How many units is your target? Is there a target for units, or just buy good deals and grow as deals come?
Yeah. So if you would ask me this 6 months ago, I would have said our goal this year was to do 50 million in acquisitions. We're typically buying anywhere from, I'd say, 10 to $15 million properties. That's our typical. We're not afraid to go a little bit higher depending on the deal, but every year, I mean, we're trying to just buy all the deals that make sense. Now, unfortunately, this year we haven't actually gotten anything under contract because nothing makes sense. We're looking in North Carolina, South Carolina, and Georgia, and we're not really trying to expand outside of certain markets within those states. I live in North Carolina here in Durham, so I'm not far from those markets. And just to increase deal flow, I don't think I want to go and look in other areas right now. So unfortunately, because of that, our deal flow has been slow over the last, I'd say, the first 3 months of this year. But the last 2 weeks, 3 weeks, it's been picking up. So it could turn around and we end up doing, hitting our goal or surpassing it. But I'm looking to be in this industry for a long time, for the rest of my life, and I don't see myself, stopping. So I think there's no real end goal in sight. We want to eventually have over $1 billion assets under management and see if we can even surpass that. And I know that will take some time, but on a yearly basis, like you said, we're just looking to buy good deals and as many as we can.
Yeah. I was on a call yesterday, and I think really the name of the game right now is to just keep submitting offers and keep them at the, of course, fair market value based on in-place NOI, but just keep submitting offers and keep those relationships with your brokers intact and communicate. And there's definitely deals that are on the way. So just being ready to execute and take those down. But, we're going into a season of sales, so we'll see.
Yeah. And we're doing the same thing. We're submitting offers and we're 10, 15, 20% off of asking price.
Yeah, you have to be.
And I've heard stories where they were third in line, third lowest, or maybe like third highest, and the first buyer ended up pulling out and it fell out of contract, and then it happened again with the second, and then the third person was able to win it at a really good price.
Yeah,
it's happening.
Yeah, and if it's an in-place based on in-place NOI, it's a business you're buying, then it's fair market value. Days of buying a property or a business at a future value, if you raise the rents, if it can do better, this and that. It was a nonsensical era in multifamily. It's still there, but getting past it. So you're in the Sun Belt states. That's and of course go on path of progress and where the population's going, so you can kind of tell where things are heading. But I know that there has been some reports coming out as far as Sun Belt markets tightening up. But when you have such a run on numbers for so long, if it decreases a little bit, then it looks bad. But it's not the case at all. It's just you've got some kind of plateau that happens over time.
Yeah,
it'll grow again.
Yeah, and I've read a few articles where they'll say, like in Atlanta, for example, there's some overbuilding going on, or a lot of new construction going to hit the market. Obviously, typically, developers aren't building Class C properties. They're typically building either Class A or Class B plus, or something that I wouldn't consider necessarily affordable. Perhaps some are, and I think there's a lot more affordable units hitting the market. But for the markets that we're in the types of properties that we're already, in our portfolio, they're considered affordable. So I still see on the properties we have, there's a lot of demand for those kinds of assets. So I don't see that going away. But on top of that, I just think with how prices are going right now, and obviously the Fed has artificially raised interest rates, prices are coming down for sure for various reasons. But I think that is one of the reasons, right? Interest rates have gone up, therefore we can't pay as much for a property, and sellers want the price they want, but they're starting to realize that they can't get that right now because we can't offer that. So as that starts to happen, if we can scoop up assets right now at this price, I still think whatever happens with the Fed, I'm not predicting it, I do think they'll come down eventually. And when it does come down, I think cap rates will compress again. Right now they're expanding. If they compress once again, then who knows what'll happen with the properties we own right now, right? It could stabilize and the prices could go back up where they were naturally. And I've heard a lot of operators take that stance as well. I'd love to hear what you think, but I think, right now it seems like there's an artificial decrease in prices because of the interest rates. Now I know there's bubbles in a lot of the markets that we're in, but it doesn't seem like it was a natural occurrence. It happened after the Fed raising rates.
Yeah, no, anything moving forward, we're underwriting for a 10-year trajectory, and I can guarantee you, and I know you can guarantee it as well, that real estate will be at a higher basis in 10 years from now. That's So no matter what, there's appreciation that kicks in, there's demand, there's supply. It all factors in. But real estate, if you're in if you're in a great market where you've got good employment drivers, you've got population that increases, you're safe. And even tertiary now, a very good possibility it might not be tertiary then. So you could accidentally buy on a path of progress and not even know it, and then things start growing around you. So there's and of course it could be by mistake, it could be by strategy, because you can kind of see where certain companies, if they like the demographics and they like the way that the area is, tertiary becomes secondary or even primary, and then you hit a grand slam 10 years from now. So, but no, I totally agree. It's real estate is definitely a safe, especially multifamily. You got economies of scale. It's safe no matter, as long as you buy it right, you're safe.
Right.
So
Yeah, I agree.
Very cool. How's your relationship with your brother? Is there families are families? You guys work tight together. You guys are building a business together, successful business. As everyone knows, sticks in their lane. Do you guys have that figured out and growing around that?
Yeah, for sure. We do have our own lanes, and you find that out too. I think when obviously our approach to our company was a little unique because we're all brothers. We were all getting started at the same time with the same interest and the same why. So we each had our own respective interests. And my twin brother, for example, he's very creative and he likes to write. He's a self-proclaimed author and seems to be author in regards to publishing his books. So
Nice.
that skill set, that skill set's unique. That's not what I like to do, but in a business, you can find something to apply that to. For instance, he handles our marketing because it's storytelling at the end of the day. And that's what he gets to apply that to every single day. And my older brother, he loves, project management, chasing down deals, walking properties, meeting with brokers, things like that. So that's what he does. I'm just a relationship builder. And from a macro level, that doesn't seem like a lot. And at first it didn't to me, but you start to realize that all of this is relationships and how you can build those and nurture those. So that's how we sort of fell into our roles through trial and error. And now with the relationship, we're really close. We actually, we hang out pretty much every day, all day. And coming from the same background, we know why we got into it, where we come from, have this mindset, values. The one thing I can say, man, is that the values are the most important thing, regardless of who you're working with, or in my opinion, who you keep close. We keep God number one. We are all faithful. And I think if you're accountable to something like that, like God, then it'll apply to your business. And whether, one day you have an opportunity to make an extra buck on someone and do something unethical versus doing something that, you may end up having to come out of pocket or lose a little bit of money on it, but you're all accountable to the same person. And you can pretty much bet that all of you guys can think that. And I think that's the most important things for me and within my close circle of partners, and especially business partners, because we're in this for the long term. So having that long-term vision as well that you share, this is not an easy business to start. And I think business in general is difficult, especially through these downturns. It can be quite worrisome and just stressful. So if you have people who approach daily habits, daily life, with the mindset that you'd like to see in yourself and also in the people close to you, it makes it a lot easier and will increase your chances of success. So all in all, really good. And we also get along and have a similar sense of humor. So
yeah, awesome. Yeah, and that's I totally agree. You've got everyone has one reputation, and protect it with your life. So there's going to be times where you don't necessarily agree with others, and just make the right move based on your core principles and ethics, and protect your reputation. That's huge.
Yeah.
Very cool. Love the insights. You're doing big things, Jeffrey. We love definitely going to follow you, and we're always here to, if you guys need anything from us, for sure. If somebody wants to get